Hey everyone, welcome to Insights That Matters. In this deep dive, we're going to be tackling, should you invest in this upcoming IPO for Jungle Camps India Ltd?
Sound exciting.
Yeah. So joining me is a financial expert specializing in the Indian market.
Happy to be here.
You, the listener, have been doing your research on Jungle Camps, and you've sent us a whole stack of information.
Yeah.
We've combed through it all, and now we're here to break it down together. So what's the deal with this company? Give us the elevator pitch.
Well, Jungle Camps India Ltd is all about a unique experience. Wildlife and nature-based tourism right here in India. They are currently managing 4 boutique resorts, a highway retreat, and a restaurant totaling 87 rooms.
Boutique resort sounds fancy, but is this like a tiny operation?
Not exactly. They got ambitious plans to expand with 4 more projects in development.
Okay.
If everything goes according to the plan, they're looking at almost doubling the capacity to 170 rooms.
Wow, ambitious indeed.
Yeah.
But as any savvy investor knows, it's not just about the growth potential, it's about the numbers. Let's dive into their financials.
Absolutely. Looking at their restated financial statements, the recent performance is really impressive.
Okay.
Their revenue has been steadily climbing, and they've managed to stay profitable.
All right, but break it down for us. Where are they making their money?
Their bread and butter comes from the core services, accommodation, food and beverages, and those exciting jungle safaris. That's what's really driving their revenue growth.
Okay, so people are paying for the experience. That makes sense. But are they actually making a decent profit from these services?
They are. Their EBITDA margin, which basically measures their operating profitability, is healthy.
Yeah.
Same goes for PAT margin, which looks at profit after taxes. And the return on net worth is pretty good, indicating they're using their investments effectively.
So from a pure numbers perspective, things are looking up. But here in India, we know the context matters. How do these numbers stack up against other similar companies in the market?
That's a crucial question, and from what I'm seeing, Jungle Camps is holding their own, even exceeding some of their competitors in terms of growth and profitability.
Now, I always say, if something seems too good to be true, it's worth double-checking. I'm looking at their cash flow statement, and I'm noticing that their cash flow from investing and financing activities is negative. Can you explain what that means for our listener who might not be a financial whiz?
Sure. Basically, it means they're spending more on investments and financing than they're bringing in from those activities. Now, for a company like Jungle Camps that's actively expanding, this isn't necessarily a bad thing.
Okay.
They're putting money into growth, which can pay off down the line.
So not a red flag, but definitely something to keep an eye on. Any other eyebrow-raising details in their financials?
Well, there's one thing that caught my attention. It seems they haven't always maintained separate bank accounts for some of their past private placements.
That sounds a bit unusual. Is this common practice?
Not really. It can raise questions about financial transparency. But to their credit, they've acknowledged the issue and are in the process of addressing it through a compounding process. Essentially, they're working to rectify past practices and improve their accounting procedures.
All right, so they're aware of the issue and taking steps to fix it. That's a good sign, but it's definitely something to delve deeper into. It's important to understand the implications and assess if it raises any long-term concerns.
Absolutely. You always want to make sure a company is managing its finances responsibly, especially when you're considering an investment.
Now let's move on to the elephant in the room, risk. Every investment comes with inherent risks, and Jungle Camps is no exception.
You're absolutely right. And they've been quite upfront about outlining these risks in their prospectus.
There's a long list of risk factors. Some are pretty standard for any business, but others are specific to Jungle Camps and the industry they operate in. What are some of the more unique risks our listeners should be aware of?
One of the most interesting ones is their dependence on permits and approvals. Because they operate in ecologically sensitive areas, they need to secure various permissions from government authorities. Any delays or disruptions in that process could significantly impact their operations.
Right, it's not just about building a resort, it's about navigating the regulatory landscape, which can be complex. What else stands out?
Another thing to consider is that some of their resorts are built on leased land, not land they own outright.
So they don't necessarily control the land their business is on. That adds another layer of complexity. What are the potential implications of this?
Well, they're essentially dependent on those lease agreements. What happens if those agreements aren't renewed or if the terms become unfavorable? It's a key question to consider.
So lease terms, renewal options, any potential risks associated with the land itself, these are all things to research further. Anything else that raises a red flag?
There's also the issue of missing historical records. Apparently, they've acknowledged that certain documents filed with the Registrar of Companies before 2006 couldn't be traced. And it gets even more intriguing. Documents related to share transfers, financials, and other important records from before the 2012-13 financial year are missing.
Whoa, that's a pretty significant gap in their documentation. Did they offer any explanation for this?
They attributed it to changes in their registered office address and methods of record keeping over the years, but it's definitely something potentially investors should take note of and perhaps seek further clarification on.
So we've got permits, leased land missing records, and let's not forget the negative cash flow situation. Jungle Camp seems to come with its fair share of risks.
It does, and that's why it's so important to thoroughly evaluate those risks before making any investment decisions.
We're not financial advisors, we're just highlighting the information that jumps out at us. But for each of these risks, it's crucial to ask, how serious is it? What has the company done to mitigate it? And what questions would we want to ask management directly?
I completely agree, and I'd add another question. What are the potential consequences if this risk materializes? Understanding the potential downside is just as important as getting excited about the potential upside.
Exactly. Investing always involves weighing potential rewards against potential risks. We've got a company with a good track record, ambitious plans, and let's be honest, a few quirks. So the big question is this a good buy? They're looking to raise capital through this IPO, but are they asking for too much?
Well, let's break down the IPO details first. They're aiming to raise a significant amount of capital, and they're planning to list on the BSE SME platform.
For our listeners who might not be familiar with the Indian stock market, can you explain what that platform is all about?
The BSE SME platform is a dedicated exchange for small and medium enterprises in India. Listing on this platform can provide companies like Jungle Camps with access to capital, but might also mean lower trading volumes compared to listing on the main BSE exchange.
Okay, so there are pros and cons to consider there. What about the valuation itself? How does Jungle Camps stack up against its peers based on the metrics they provided?
They've shared their price-to-earnings ratio and return on net worth. These figures help us understand how the market values the company relative to its earnings and net assets. And based on these metrics, their asking price seems to be within a reasonable range compared to similar companies in the Indian hospitality sector.
But those are just numbers on a page. Every investor needs to understand what those numbers actually mean. Can you break down the price-to-earnings ratio for our listener?
Of course. The price-to-earnings ratio, or PE ratio, helped us understand how much we were paying for each rupee of the company's earnings. A higher PE ratio might indicate that the market expects strong future growth. In Jungle Camp's case, their PE ratio seems to be in line with industry averages, which suggests their pricing isn't outlandishly high.
Right, it's all about context. Now remember, as with any investment, the numbers are just a starting point. You can't rely solely on the valuation provided in the prospectus.
Exactly. It's crucial to conduct your own due diligence, look into their growth projections, consider the broader market conditions, and factor in the risks we've discussed.
This is your money on the line. You need to be comfortable with the investment before taking the plunge. And that means going beyond the numbers and looking at the bigger picture. So let's shift gears and talk about the people behind Jungle Camps, the promoters.
The promoters are always a critical factor in any investment decision. They're the driving force behind the company, and their vision and experience can make or break its success.
So who are the key players running the show at Jungle Camps?
The main promoters are Mr. Gajendra Singh and his son, Mr. Yashavardhan Rathore. They come from a hospitality background, bringing decades of experience to the table.
Okay, that's a positive. Experienced leadership is always a plus. But experience alone isn't enough. What about their track record? Have they been involved in any other successful ventures?
That's something you'd want to dig deeper into as part of your due diligence. Researching their past projects, looking for any red flags or successes. It can give you valuable insights into their management style and ability to execute.
All right, because ultimately it boils down to trust. Can we trust these promoters to steer the company in the right direction and deliver on their promises? Now, speaking of promises, let's talk about the future. What are Jungle Camp's plans for growth and expansion? We know they're aiming to nearly double their room count with those 4 additional projects. Can you tell us more about those projects?
They're quite diverse, actually. There's a new jungle camp planned for Sanjay Dubri National Park, a heritage hotel in Shibpur, and another highway retreat, to name a few. It shows they're not just sticking to one type of property,
Right?
which can be a good strategy.
Diversification can be a smart move. It spreads risk, but it also means they need to be good at managing different types of properties, catering to different customer segments. It brings us back to the question of their management team's capabilities. Do they have the expertise to handle this kind of expansion? It's something for our listener to ponder.
Absolutely. Now, shifting gears to another crucial aspect, valuation. We know they're looking to raise a good chunk of change from this IPO, but is the price right?
Right.
That's the million-dollar question every investor needs to grapple with.
Right. And it's not always a simple answer. We're not just buying what the company is today, we're buying into their future potential. And that involves making assumptions about their growth trajectory, their execution capabilities, and a whole host of other factors. It's a bit like trying to predict the weather. You can analyze the data, but there's always an element of uncertainty.
Very true. So how do we even begin to approach valuing a company like Jungle Camps?
Well, we've discussed some of the key metrics they've provided in their prospectus, like the price-to-earnings ratio and return on net worth.
Right.
We can compare those figures to industry averages and to similar companies in the Indian market to get a sense of whether their asking price is in the ballpark.
But those are just numbers on a page.
What?
What about the qualitative factors? Things like their brand reputation, their management team, locations of their properties. How do we factor those less tangible aspects into the equation?
That's where things get a bit more subjective, and where an investor's own judgment comes into play. You have to weigh the risks and opportunities, consider the company's growth prospects, and decide whether the potential rewards outweigh the potential downsides.
It's about finding that balance between the cold, hard numbers and your gut feeling about the company's future.
Exactly. And it's important to remember that valuation is not an exact science. There's no magic formula that will definitively tell you whether a company is overvalued or undervalued.
You've hit the nail on the head. It's more of an art than a science, which is why it's so important to do your research, gather as much information as possible, and form your own independent opinion.
Don't be afraid to seek out different perspectives. Talk to other investors, read analyst reports, consider different valuation approaches. The more information you have, the better equipped you'll be to make an informed decision.
Now, there's another layer of complexity. We need to consider something specific to the Indian market. Currency Jungle Camps financials are reported in Indian rupees, but as an investor, you'll likely be thinking in terms of your own currency.
That's a crucial point. So how do we make sense of these numbers in a different currency?
You need to factor in the current exchange rate between the Indian rupee and your own currency. And it's important to keep in mind that exchange rates can fluctuate significantly, which can impact your investment returns for better or for worse.
So even if Jungle Camp's business performs well, your investment could still be negatively affected if the Indian rupee weakens against your currency.
Precisely. That's why it's essential to consider currency risk as part of your overall investment assessment.
It's not just about understanding the company, it's about understanding the broader economic and financial landscape in which they operate. Now, as we wrap up this deep dive, I want to bring it back to something fundamental. You, the listener, and your personal circumstances.
That's the most important point of all.
Even if Jungle Camps ticks all the boxes from a financial and business perspective, it might not be the right investment for you specifically.
Every investor has different goals, different risk tolerances, and different time horizons. And it's crucial to align your investment decisions with your own unique circumstances.
So before you make any decisions, take a step back and ask yourself, does this investment fit into my overall financial plan? Can I afford to take on the risks involved? Am I comfortable with the potential downsides as well as the potential upsides?
Those are the questions that will ultimately guide you toward making the best decision for your financial future.
And we're back with our deep dive into Jungle Camps India Ltd. We've spent a lot of time looking at the company itself, but let's zoom out a little bit.
Okay.
What's the outlook for the industry that Jungle Camps operates in?
That's a great point. Even the best-run company can struggle if the industry itself is facing headwinds. So paint us a picture of this wildlife and nature-based tourism sector in India. What's the forecast?
Well, the outlook is actually quite promising. India is a country with incredible biodiversity and a growing middle class that's increasingly interested in exploring their own backyard, seeking unique travel experiences. So there's a demand for what Jungle Camps is offering. But what about competition? Are there other players in this space they need to worry about?
Definitely. There's competition from both established hotel chains and smaller boutique resorts.
Okay.
But Jungle Camps has carved out a niche for themselves. They've built a strong brand reputation focusing on sustainability and authentic local experiences.
That differentiation is key in a competitive market. But there's another factor we need to consider: The regulatory landscape. Are there any government policies or regulations that could impact their business?
That's always a crucial consideration, especially in a sector like tourism, which is often subject to government oversight. In India, there are a number of regulations related to environmental protection, wildlife conservation, and land use
Yeah.
that Jungle Camps needs to navigate.
So they need to be on their toes, staying informed about those regulations and adapting to any changes.
Absolutely. And that requires a management team that's not only skilled in hospitality, but also adept at dealing with the complexities of the Indian regulatory environment.
Okay, so we've got a growing industry, a competitive landscape, and a complex regulatory environment. What does this all mean for Jungle Camp's future prospects?
It suggests that there are both opportunities and challenges ahead.
Right.
The company has the potential to capitalize on the growing demand for wildlife tourism, but they'll need to stay agile and adapt to changing market conditions and regulatory requirements.
It's a dynamic situation,
Yeah.
not a guaranteed win, but not a lost cause either.
Yeah.
It all comes back to the importance of thorough due diligence, weighing those risks and rewards, digging into the details, and making an informed investment decision based on your individual circumstances.
Couldn't agree more.
As we wrap up this deep dive into Jungle Camps India Ltd, let's recap the key takeaways for our listeners.
We've analyzed a company operating in a promising but competitive industry with a strong brand and ambitious growth plans.
We've seen they've demonstrated solid financial performance in recent years, but there are some quirks in their financials and a few red flags that warrant further investigation.
We've uncovered a number of risks they face, including dependence on permits, leased land, and potential regulatory changes.
And we've explored their valuation, which seems to be within a reasonable range. But as always, conducting your own due diligence is essential, considering qualitative factors as well as the numbers.
And finally, remember, aligning your investment decisions with your personal circumstances is crucial. Consider your risk tolerance, your financial goals, and your time horizon.
So there you have it, a deep dive into Jungle Camps India Ltd, exploring the potential and the pitfalls. We hope this has given you the insights you need to make a well-informed investment decision.
Remember, knowledge is power. The more you know, the better equipped you'll be to navigate the complexities of the financial world.
Keep learning, keep exploring, and keep asking those critical questions. And if you enjoyed this deep dive, don't forget to like and subscribe to Insights That Matters for more in-depth analysis on topics that matter to you. We'll be back soon with another deep dive. Until then, happy investing.